Thank you so much for all the support you gave me, guys.
Okay.
Today, I got promoted.
Those who spread goodness radiate happiness to everyone around them. Introducing LOLC Finance Credit Cards. Fuel the goodness in you.
Welcome to LMDtv. I'm Anushan Selvarajah. Joining me on Talking Business this week is the Chairman of Citizens Development Finance PLC, Alastair Corera. Welcome to the show, Alastair. Good to have you with us.
Thank you, Anushan, and thank you for having me on.
Just to get the ball rolling, how has the development finance sector prevailed over the past year or so?
So I guess the biggest challenge it faced was with the changes that happened with the pandemic, and it came upon us so soon that everyone pretty much had to sort of innovate on your feet, literally. So that has taken the main focus of everyone trying to work through this. And a few positives though, because I think what happened is when you were faced with this, then and your normal course of the normal way you handle businesses didn't work. There were other plans that were probably in the making but hadn't got pushed forward. All of those got accelerated, right? And I think everyone would say that and I think it's well known now that the technology, the advancement that happened, what would have taken years just got squeezed into months.
How has CDB itself handled this whole situation?
Fortunately, CDB had been working on developing its technology platform for some time. It had been a core part of their business plan, and so I think what it was really put to test. And from pretty much day one, I think they were able to deploy people working from home, and it was almost a seamless transition. Even though people were working from home, I don't think a lot of the customers and the clients felt very little in terms of the level of service changing.
Alastair, what would you say are the key governance concerns faced by the sector?
Yeah, so if I can take a step back, I think one of the problems is that it's when it comes to particularly when you say development finance, I'm just going to focus on what they call the non-bank financial institutions, I think, which plays a big role in this. So you have the banking sector, and then you have the non-bank financial institutions, which serve a very important, but shall I say a smaller, in terms of size, larger numbers, but smaller ticket size client base, right? And so we have something like 41 companies in this sector. That's regulated entities. Apart from that, I think there are other providers who also try and provide similar services that may not be regulated, and I think the authorities are trying to work on that. But under the regulated sector, which comes under central bank, there are a little over 40. I think it's 41 companies. Now, of these 41 companies, 15 companies account for the bulk of the assets. Above 80% of the assets is accounted for by 15 companies. So the others, the remainder, it's a challenge for them, because when you're running a financial institution, there are certain costs that are given, particularly today with technology. There is certain investment that you have to make, and if you're a smaller player, it's so much harder to do that. So, and you also have to, one of the key, you also have to really focus on your cost of funding, because based on your cost of funding is when you can lend. So the smaller you are, sometimes it is harder to access cheaper funding. So as a result, I think those smaller players are forced to get into areas which, so their cost of funding is high, in which case they're starting to lend at higher rates. You're sort of pushed towards the riskier segment. And that's where I think the governance issues also creep in, because when you're challenged to, meet these requirements, you're in a riskier segment, you have less resources, and then you're pushed to taking chances or taking on business that you might otherwise not have done.
Would you say that the country has moved forward in terms of financial literacy and inclusivity?
So we are moving forward. I guess that's an ongoing process. But with the onset of technology and digital banking, I think the ability to really go in for inclusivity is very high. right? If you look at the penetration of, just for example, if you look at the penetration of mobile phones, it's very well penetrated. So imagine if now more and more people start, like, simple thing, more and more people start actually doing their financial services or financial transactions using the phones, right? That alone allows them, you can access the system. So while it has been happening in a slow pace, I think now with the onset of digital banking, you should see a massive acceleration of this, and you will then, and I think even the regulator, so there were certain innovations, some of them from non-bank entities that were trying to provide services that are usually done by the financial institutions. But they couldn't access that because this is a regulated industry. But now I think even the regulator sees the need for it, and they've opened up areas where non-bank institutions, non-financial institutions, meaning tech finance type of players, can come in and try out products in the financial services, the platforms, so that so going forward, I think when these also come in, and it will then, they will probably join with banks, or sometimes they might be their own players that might grow big enough to be a sizable player in the financial services market. Yeah, you take a leap forward, and this inclusivity will happen.
We'll go in for a short break now.
Our story is one of reimagining. Reimagining who you can be, what you can achieve, and how SEMA can support you. As technology and digital platforms disrupt businesses, we are reimagining what the profession can be. We've updated our syllabus to meet the expectation of employers, ensuring SEMA-qualified professionals have the skills to make an impact from day one. Reimagine your career. Contact SEMA Sri Lanka.
Welcome back to the show as we continue our discussion with Alastair Corera, Chairman of Citizens Development Finance PLC. Continuing from where we left off, Alastair, would you say that there is room for consolidation within the financial sector?
So I wouldn't say the consolidation is so much between banking and non-banking. There is, so the regulator is making a big push towards consolidation in both sectors, banking as well as non-banking, what I call non-bank financial institutions, right? That's like the finance companies. So there is a big push, and again, same problem, because both for the size of our market, the thinking is that there are too many players and that it is fairly fragmented, and as a result, your costs are higher. So there is a big push by the regulator to achieve consolidation. So that will happen. Then in that process, there's nothing to prevent banks and NBFIs consolidating or merging. Yeah, so there is definitely a push from the regulator, and as a result, this is going to happen. It also makes economic sense in some cases.
Now, there are a number of individuals and groups involved in the loaning of finance to others. Now, they are unregulated, and there are a number of horror stories which have come out in terms of when they've gone out to retrieve the funds they've loaned. How does this impact the perception of NBFIs?
Yeah, so Anushan, I think you hit the nail on the head. Perception, because you have a few of these incidents that maybe not a few, I think there may be more than a few, but by and large, if you look at, if you take a big picture and you see out of the total number of, clients who are affected by this, of the total number of borrowers in the market out there, the number of people affected by this is quite small, but they do hit the headlines. And as a result, I think there is the perception is that there is a lot of this out there. I feel with the regulator is also fairly strong on this, in the sense that they're fairly strict with the regulated financial institutions. So it's a few of these, some of the non-bank, you have some of these non-regulated entities that I guess even the press and the others may not be able to differentiate between these two categories. And as a result, they also get an overproportionate amount of publicity, because the nature of the event, someone's, that's forcefully being taken or whatever. So that happens. And as a result, I think you get a lot of publicity. I'm not saying that it doesn't happen. I think it does happen, but I feel that the publicity it receives is more than proportional to the actual extent of it out there in the market.
On that note, Alastair, are the regulated players doing enough to curb this?
Yeah, so I think there's certainly more that can be done, and even the central bank is probably and the government is probably drafting up some framework as to what you can do and what you can't do a little bit more specifically, and how you handle these recoveries. So a short answer is there's certainly more that can be done. There is I think the Finance House Association also it's a self-regulating body, and they are also working with their members to improve this.
What are the challenges that you see facing the NBFI sector moving forward?
Yeah, so if you look at the NBFI sector, one of their key products is financing of vehicles. It's leases and it's financing of vehicles. Now, I think so that's served the industry very well over the last so many years, but they have come to a point, I think, if they want to grow beyond where they are now, that product range will have to expand, and the services you offer will also have to expand, because I think because of the pandemic and because Sri Lanka has challenges in terms of foreign exchange and its reserves, there are certain controls on imports. So right now there is no more. They have suspended imports of vehicles, which means that even that hastens this process where companies have to look at different services and different products. So that would be one of the things that you really have to work on, and that will be challenging, because I think it's for so long they have dependent on this, and now it's coming to an abrupt change where they have to find alternatives.
As a final question then, Alastair, what is your take on the competition within the sector?
So competition is very intense, and in some ways what has happened, because even the regulator has brought in certain, it has dictated a lot more rules for the NBFI sector than for the banks. Right, in terms of it, how much you can, it has given maximum deposit rates, and sometimes the gap between what a bank can offer and a finance company can offer is now not very wide. So in that sense, you don't have, so when you want to compete, right, but you don't have too many ways, like you can't, so competing on price sometimes is not possible because there are maximum rates and everyone's probably at that rate. So you have to find other ways of competing. So it's on service, it's on your type of product, convenience. So which brings us back to, the need to invest in technology, new products, and those things. If you go back some time, like if you go back, say 10, 15 years, the leasing industry was handled by the NBFIs and the banks were not so much into that. But today, as the banks also grow, they are also looking for new avenues to grow. And they have also come into the same sector. So now there is direct competition between the banks and the NBFIs. By and large, the banks can also access cheap funding, right? So it's tough. So you have to compete on, it's not only on rate, you have to compete on other services and conveniences.
Well, that's all the time we have. Thank you very much for joining us on the show, Alastair. It was a great pleasure.
Thank you. Once again, Anushan, thanks a lot for having me. It's been a pleasure.
After a short break, Ashwini Vethakan will bring you an update on life on Earth. Stay tuned.
Welcome back to the show. I'm Ashwini Vethakan. The global cost for cybercrime is estimated to have exceeded $1 trillion since 2018. According to the Hidden Costs of Cybercrime report published by the Center of Strategic and International Studies and McAfee, the cost to the global economy more than doubled in 2 years. Although thousands of cybercrimes occur every year, a survey of 1,500 organizations revealed that most do not have plans to reduce the impact of IT security incidents on operations. The report recommends having plans in place to prevent and respond to them and addressing communication issues in organizations. In addition to monetary costs, the impacts of cybercrime also comprise a range of costs without easily assigned values. These include opportunity costs, time and money spent on cybersecurity decision-making, the effect of downtime, loss of productivity, and damage to organizational brand and image. Ensuring that there is a plan in place to prevent and to respond to IT security incidents is essential to managing them. However, only 44% of organizations surveyed have a plan to do so. Meanwhile, 32% of decision makers who say their organizations have prevention plans do not seem to be as prepared to respond, as a mere 19% report that they have response plans. These plans were not considered to be useful or successful. Furthermore, 1% of survey respondents did not have plans to prevent or respond to IT security incidents. According to the report, the estimated monetary cost for cybercrime last year was $945 billion. Moreover, global spending on cybersecurity during the year amounted to more than $145 billion. When it comes to the impacts, 68% of respondents reported experiencing downtime because of cyber attacks. Furthermore, 26% of those consulted identified damage to their organization's brands due to such incidents. As these risks continue to grow, cyber risk insurance is becoming the norm at large businesses that expect to face cyber attacks at some point. This market is continuing to grow as the estimated value of global cyber insurance premiums in 2020 was $5.5 billion. Implementing technical solutions will not necessarily solve these issues, as 38% of respondents stated that a lack of user knowledge was central to cyber criminals targeting their organizations. Despite this, 45% of organizations surveyed invested in new or different security software following a security incident. This was the most common modification of processes in the aftermath of such occurrences. On the other hand, 32% of respondents considered their organization's plan to be completely successful in responding to IT security incidents. That's all we have for you this week. Don't forget to subscribe to our YouTube channel and follow us on Facebook and Twitter. Thank you for watching and stay safe.